Hi and welcome to the Money Effect, where I bring you all news, money, and finance related. Disclaimer: this is not financial advice; it's just strictly for educational purposes and just my opinions. Hit the like and subscribe for the YouTube algo and continue content. And now that's out the way, let's go. So, what's been going on in the stock market this week? My guy here, Mr. Chair Powell, uh, Federal Reserve, the equivalent of the United Kingdom's Bank of England that sets interest rates. And although we focus on America, I mean, they kind of lead the way. So whatever America do, I mean, everyone's going to do after, likely. So one thing about interest rates, when you increase interest rates, essentially two things happen. Uh, you pay back more money or interest on what you borrow, and potentially you get more interest on what you save. Obviously, that's both negative because it's going to increase demand. So if your mortgage is £800 a month and it suddenly goes up to £1,000 a month, because of an interest rate increase, you're paying an extra £200. That extra £200 means, you know, no more partying. You're going to have to, well, unless you want to get credit cards and do all that, which some people do to keep it going, but that's not sustainable forever. That £200 has to come out from somewhere. And likely, you know, if you go clubbing and you spend £200 in one weekend, well, I'm sure a sensible human being will say, let me not go clubbing this weekend so I can pay my mortgage. Uh, then at the same time, you're getting more interest in your savings account. So you're thinking, well, I've got £200. I don't really earn any savings on it, so I might as well just spend it. But now it's like, okay, well, I'm getting a bit of savings now, so let me save it, not spend it. Either which way it decreases demand. But all these things are kind of lagging. So, the real effects is never really known from about, let's say 12 to 18 months. So all the rate rises the Federal Reserve has done, we're not really going to know the true impact until, down the line, probably end of 2023. Now, the true impact in a sense has inflation gone down to an acceptable level where they can say, oh, let's stop interest rate rises. Um, let's stop interest rate rises now, and I think we're good. Or is it have they done too much? Have we now gone into a hard recession where, unless we see a significant amount of growth, like quantitative easing, printing money, which again will actually just cause inflation to rise again, or do they just leave it? Then we're in a hard recession, or is it just a soft recession where we have some negative growth, but it's nothing that we can't bounce back from. So obviously, at this moment, we don't know. In the Bank of England, probably they're raising rates as well. Probably next year, again, they follow America. So probably, if you're looking to take out a mortgage now, I guess it's a good time. But interest rates are going to keep going up in the UK, and probably by next year they'll do the same. But what Chair Powell is basically saying is, essentially, we are seeing inflation going down, um, but it's not consistent enough for us to stop. It's not consistent, but it is consistent enough for us to, let's just potentially, we're going to start thinking about slowing the rate of increases. So instead of raising by 1%, maybe 0.5%, and then we'll get to a point where we're going to wait and see. So he started to talk like, we're seeing a bit of slack in the economy, in employment is going up and stuff like that. So let's just wait and see. So, I mean, that's some good talk. Is it the bottom of the stock collapse? Probably not. Who knows? But it's definitely a talk where, it's now we're getting to the point where let's start easing off because we don't really know the full impacts of these things. And like I said, he leads the world, so where he says goes. So yeah, that's where we're at with that now. So in December, we're going to see if we start seeing lower rates and inflation is falling, then that's a good sign. That's a good sign that we're near the bottom of the bear market. Is it a good sign to go all in? No, man. I've been an advocate of only go all in when you see Federal was not even never go all in, but if you start seeing the Federal Reserve saying, nah, we're going to rapidly start decreasing interest rates and quantitative easing, then you can know the bull run is coming. But at the moment, just them saying they're going to lower the rate of increases, it's not, for me, it's not something to go all in, but it's definitely a sign that we're potentially nearing some sort of bottom. And for those that can kind of ride out the storm, even if it's not a bottom for the next year or so, it's still a good investment. So, I mean, this is going to help growth stocks. So if you look at some of the big growth stocks, Meta, obviously Facebook owner, I mean, they've cut a lot of cost as well, but we're seeing they're bouncing back. And this is one of the things I'm saying, that why it's good to kind of average in. I mean, if you bought here, you're kind of stuck. But if you're now at these low levels at 90, in the last month, we've gone up by 36%. If you're someone that's just sitting at home, you're not investing in the stock market, these prices are so low now. You could have literally, like, you know what I mean? You're just, it's a good opportunity to look, because you know, yeah, if you've got something that was at its peak, 352, up 78, and we're coming to down to here 90. I mean, unless this company is going to go bankrupt, you're a good place. And if it does, you lose another half. It's definitely way better than investing here. So, like I say, it's a good time to be going in if you want to average in, if you want to go in all in, just for that, catch that bounce. It's definitely a good time. But yeah, these growth stocks are starting to kind of look like they're finding their bottom. Can they go down more? Probably, because he didn't actually say he's going to stop raising rates. He didn't actually say anything about quantitative easing. He literally just said that he's thinking about a smaller interest rate hike, and the market did really respond well. And as we get into Christmas with kind of low volumes, we tend to see what they call a Santa rally. So, I mean, again, I wouldn't get fooled and start going all in, but it is definitely a good time to just keep interest, keep looking at those stocks, keep averaging in. Um, this is one of the stocks I like. Tilray, if you're somebody that believes in medical cannabis, it's one of the biggest companies in that field. Got a good track record. Obviously, you can see the share price here. But in the last day, with the news of these growth stocks are now 5 days, 20%. And if you look at pre-COVID, for example, this was a stock that was trading at $20, $30. It's at $5 now, so 6 times less. Probably going to go down a bit more, but I do feel we're coming to that point where we're at where we're forming bottoms here. And it's been in this for the whole year, literally been going down and trading at these low levels. Like, listen, this company was at hit $2 in September. I mean, if the company's not going to go bankrupt, then, and you believe in something like me, I believe in medical cannabis. I've been buying into this company. Why not? At least I didn't buy in here. If you bought in here, then yeah, you're stuff. But if you haven't bought in, you're new to investing. This is the time. We're getting to that point where these stocks are forming some sort of bottom. With the Powell's comments, like I said, will I go all in at this point? Probably not, but definitely it's time to start putting that money to work, in my opinion, if you've got a long-term horizon for the next 2 to 3 years. So how did that affect crypto? I mean, crypto is dealing with its own issues. The bad actors, we discussed about this SBF guy. We're going to talk about him a bit more, but again, Bitcoin rose on that remarks. I mean, Bitcoin does move in sync with these tech stocks. It was momentarily, it wasn't, but Bitcoin had a nice little rally on the chairman's remarks. But at crypto, we're at the point where I feel crypto is going to go down, especially with what's happened recently. People lost a lot of money. So I still think crypto is going to go down. And like I said, you're at the point where you either want to average in, or you want to try and form some kind of bottom or hold. And it's just really going to get to the point where it's either going to crypto is either going to go to zero, or you're going to be so happy you invested now. In a few years, you're going to be laughing that you can just do all your legwork now, keep averaging in, get it when the price is low, put a big lump sum then down, and then just when the bull run and the mania hits again in 3-4 years, you're just laughing because you're just seeing it rise to the top. Or you've averaged in now, and in 3-4 years it goes to zero, you've lost money, and that's it. And crypto's done after that, and it just becomes that new thing. But me personally, I believe in the technology. I believe it's going to change the world. So I'm still averaging in. one crypto related news was this guy here, Sam Bankman-Friedman. He brought down FTX. 30 billion gone to like 100,000 in literally 5 days. I mean, a lot of people have lost money from this, and there's a lot of companies that are going bankrupt on the back of this. A lot of crypto companies. If you have crypto, you know, unless it's on a Coinbase, what they say is crypto. If you don't own your keys, you don't own it, and that's what is happening with a lot of these companies now. And that it's kind of against what crypto was for. Crypto was a place where you could control your own assets. Like me personally, I've got my Bitcoin stored in a hard wallet. You know, um, that's that no one can access that. And apart from Coinbase, which is the only regulated company in the world on crypto, obviously Binance. I mean, I wouldn't put anything on Binance, but Coinbase is regulated. They're going to start publishing proof of reserves. Then you need to be control of your assets, because what's happening with these companies is that a lot of these companies, like in the SPFs, in the FTX situation, you went to store your cryptos there, and then they've now used your cryptos and they've gone and invested them elsewhere, and then they've lost loads of money. And then when you've gone like, oh, that's cool, let me get my money back, let me get my cryptos back, there, well, we don't have them, because once you give them to the exchange, that's theirs now. And this is a problem. And then that's now having downstream effects like Celsius. People had Bitcoin worth, if you had a Bitcoin worth 1 million, you're like, nah, I don't want to sell my Bitcoin, it's worth 1 million. Celsius will come to you and say, you know what, we'll give you a loan of 250,000. So that's 4 times 4 times less loan value of your crypto. You've got 1 million crypto. Give us your 1 million crypto. We'll give you 250,000. Yeah. And then you can get that loan. Now, when you pay off that 250,000, you're going to them like, yo, where's my give me back my Bitcoin, my crypto. Like if you paid off your house mortgage, for example, you want the house is yours. And these companies are turning around like, well, we ain't got it. We either invested it, it's falling so low, or it's just gone elsewhere. And in their terms and conditions, it says it's theirs. So you're just like, wow. So I paid you the loan, I paid you the fees, and I'm not getting my crypto back. Imagine that. Imagine you're sitting in the house paying your mortgage, and then after 30 years, you paid off all your mortgage, and the bank says, oh no, we still own the house. And there's probably going to be more fallouts from guys like this. But yeah, this guy went on a tour. He went on a world tour. I don't know what he's on. He's just on, he's just got good lawyers. And he's basically just saying he didn't know. And it's just like, I didn't know what I was doing. That's the excuse. And he'll probably get away with it. But I mean, it looks like some straight up fraud to me. Once we get all these guys out, and probably we're going to get some regulation, I feel like it will help crypto. But at the moment, we're just waiting for all these. We're still in this stage where there's a lot of leverage, and they're still going to be washing out, and there's probably going to be another SBF somewhere. So until all that is out, and until we get some regulation, until we get some more retail confidence, I don't see Bitcoin rallying hard. But me, that's a good time to just keep stacking up, keep averaging in, and when that bull run comes, I'll be enjoying. Uh, just a quick one on China, so we know what's going on in China. They've been having a lot of issues. It's kind of affected Apple, and obviously they're thinking about moving their production out of China. So anyone that's got a iPhone for this Christmas, expect delays. So if you're looking to get an iPhone or anything like that, or you're looking to buy it for a loved one, they're quite expensive. But yeah, get your order in ASAP, because you're probably gonna be delayed due to China's zero COVID policy. Hasn't affected Apple's share price too much though. Look fairly stable, to be honest. I mean, are we going to go into new highs? I don't know about Apple, but yes, it's not really affected them too much. All right, cool. I'm going to leave you the last one now. So as I said at the start, we're starting to get some good news now. Obviously, interest rates are going on. So what should happen is when interest rates go up, these banks should now, obviously, they're going to increase what you borrow for them. They're going to increase the interest rate. So if the Bank of England increases it, what interest rates by 1%, the bank is going to, HSB has Halifax lawyers, whatever, is going to increase their loans to you. But at the same time, they should increase their savings. And what's been happening is they're increasing their loans to you, but they're not really increasing the amount they give on your savings. They're trying to kind of save that in between part. But as competition grows, and it generally always starts from the little banks first, you're going to start seeing more deals. And obviously, this is probably the best deal on the market at the moment. You do need to have a current account with First Direct. Um, and I guess not many people would, because you'd have Santander, Lloyds, and things like that. But if you have a current account with them, if you want to switch, they'll give you £175 to switch, and then you can set up a regular savings account, put in a maximum of £300 for 12 months, and you're going to get 7%. I think if you put £300 in every month, I think your interest on that is going to be like 140 or 150 a year you'll get back, which, I mean, it sounds small, but it's probably the best deal out there. So, I mean, anyone that's looking at getting a new current account, anyone that's looking at switching, this is one of the best deals on the market, and we're going to probably see a lot of deals. And then what will generally happen is, once we see these challenger banks, and make sure all these banks are FCA. I mean, this is FCA. Well, this is part of HSBC, so it's FCA regulated. So always make sure anything is FCA regulated where you put your money in. So if it does collapse, per bank you get 75,000. I think you have to be a bit careful when it comes to these kind of banks, because if you had, say, 75,000 in HSBC and 75,000 in First Direct, and then HSBC collapsed, which then brought down the First Direct, you would only be able to get money back on the 75,000. I mean, the likelihood of HSBC collapsing is, well, we did see it in the financial crisis, but it's very, 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 maybe like a 2 or 3% chance, but never say never. But First Direct, a known division, shouldn't collapse either. But if you just be mindful, if you are seeing these good deals and seeing these good saving rates, just make sure that the bank or whatever is directly FCA regulated, so that if anything happens, because a lot of them people that will give you the good deals tend to be the ones like not regulated, and we've seen so much fraud these days. You don't want to be in a position where you put your money in and then you don't get nothing back. So yeah, just make sure it's FCA regulated. But yeah, if you're looking at switching accounts or doing anything like that, £175, probably one of the best deals on the market at the moment. Right, that's the money effect. I hope you enjoyed. Please like and subscribe. Stay tuned. Yeah, as we head into Christmas, probably see a rally, not that much volume in the stock market. And next year, I mean, the first quarter, I don't want to put no predictions out, but we'll probably see some decrease in, especially when the big punching funds start selling. But listen, I feel if you're here for the long term, you're someone that's investing long term. Listen, some of these companies are at great values right now. So yeah, keep your education up. Right, signing out. Money effect.